my results for the week, right? 4 wins, 0 losses, plus 400 pips. And 8 RR. Now, I'm showing you this for a very particular reason, and it's not to pat myself on the back because I am the first one to know that I can easily go and lose the next 2 in a row if I get too cocky. All right. So I do not really care that I'm 4-0 and that I had a great week because the market will come for you and your blood if you let it. So always, guys, don't get too high and don't get too low. That's the biggest issue people have. I've seen people that just quit a little bit too soon. And I've also seen people make like 8 grand their first 30 days, getting lucky, and then they throw it all away the next month. Do not be either or, guys. You got to be even keel, cool, calm, collected. Right? All the top performers in the world is called your game face, right? Game face. Game face means that you're serious and you're not letting the emotions get to you, right? So, and I'll address some of these technical questions when it comes to what you guys are asking me in the chat real quick. So I will get to that, okay? But I just want to kind of, finish my thought here because if I don't, I'll start rambling, okay? So don't get too high, don't get too low. So I bring that up because I could have kept trading, right? But in trading, man, like if you have a really great week and you feel that you have euphoria, because I'm not gonna lie, that last trade that I had, it was euphoric. Like I know we covered it yesterday, but we had a sell and it literally activated. And technically it took like 15 minutes to play out, but the actual candle that moved and hit all take profits happened in 60 seconds because of the NVIDIA earnings report. And it was just madness. Like it was just like everybody going crazy in the chat. I got freaking tagged on social media forever. I got like the most praise I've probably ever gotten in a single trade in the 2 years that I've been in Akashx. So if I'm in that state of mind and I keep trying to trade, it's like when you go to the casino and you hit a jackpot on like a slot machine and you go and try to play five more games on the slot machine. Do you think you're going to hit the jackpot again? It's possible. But if you have to have a lot of self-awareness as a trader, guys, when you come into this thing. And I'm talking to the people that are a little bit experienced, but I'm also talking to the newbies that are just taking trade alerts. Because it doesn't even have to be your own trades, guys. If you're taking alerts from, an educator or multiple educators and you're up for the day, dude, walk away. Walk away. Because here's the thing, guys. If you don't build the discipline, you're going to build the discipline through losses or you're going to build the discipline through wins. I know which one it's easier to build through. One of them is not so fun to build discipline through. So trust me, if you're up, you stop. Now, the most important thing, okay, so what's the most important thing? 4-0, 4,000 pips, or 8 RR? Now, I'm not going to say I'm right or wrong. I'm going to tell you my opinion, but I want to see genuinely, like, for you guys, like, without being influenced by anybody else, like, what do you honestly think is the most important thing out of this? Going 4-0, making 4,000 pips, or 8 RR? And if you guys don't know what RR means, which is fine, that just means like risk to reward. So basically you whatever you risk, you made 8 times. I feel like we have too many Akashx people here. I feel like we have too many Akashx people here because everybody got the right answer. Yeah. A pip is like how many points we caught. Yeah. So pips are like just saying we caught that many points in the market. And depending on how much money you risk per pip is how much money you make. So if I risked 10 cents per pip, I would have made $400 off these trades. If I risk $1 per pip, I would make $4,000. If I make, you get the point, right? So that's what pips are. Now I say points because I trade the NASDAQ and with the NASDAQ and indices, you measure technically the market in points and not pips. Pips is really more of a forex term. So when I take these trades, I specify like, hey guys, I have 50-point stop losses, but it's 500 pips. And I usually talk about pips just to not confuse people, because a lot of people are trading things like gold, they're trading FX pairs, like, you know, currencies, and they all talk pips. So I'm just gonna say pips, right? But yes, the ARR for me is the most important thing. All right. Appreciate that from Aaron. So the reason why, guys, is because if I am 4-0, but I only caught, like, let's say I went 4-0, right? But I risked whatever. It could be 1%. It could be even, let's just talk money, right? Let's just talk money for the new people, right? Let's say I risked $100 per trade, and each of those trades I closed $50 wins. I risked 100, but I closed all 4 trades with $50 profit. That means that I made $200. So if okay, here goes the scammer. I'm gonna lock the chat, guys. All right. Do not click the links, please. Okay. Do not click the links. You know, our scammer friend is a little random, you know? I feel like if you're gonna scam, you gotta be more professional, you know? Like show up on time, beat me to it. I don't know. Like you're inconsistent, bro. The day before, you came like the last 10 minutes. Then the day before that, you were like right at the beginning. Now you're like midway. Damn, man. If you're gonna be in the scamming business, at least be good at it. You know, that's all I say. All right, do not click the links, guys. Eventually they'll get bored and hop off. If you want to stay to the end of the call, maybe I turn the chat back on and you can try to scam again. You're more than welcome to try. So if we go 4-0, but I closed $50, but I was risking 100, right? Oh wow, 4-0. Fantastic. Maybe I made 400 pips, right? Or whatever. Or let's say 1,000 pips. 1,000 pips, 4-0. I made 500, or I'm sorry, I made 50 risking 100 each trade, so I'm up 200. Well, if I lose 2 trades back to back, so if I lose 2 trades in a row next, and again, my risk was 100, right? That 200 with 2 losses now gets erased and I'm back at 0. So that's why I don't really care to flex this or to flex this. Like it's cool, you know, like you can say it does matter, right? But I think this is the most important thing, because this is what allows us to lose confidently. This is what allows us to lose with a lot less stress. This is what allows the math to really work in my favor, so I don't have to be a 90% accurate trader to make money. Okay. Because if I'm taking a setup and I'm making 2 to 4 times my risk, or even if I just make back whatever I risk, which I'm not a fan of that, but at least you're, you know, going 1 for 1, right? Then you can kind of at least stay afloat, right? But ARR is the most important thing and why I want to stop for the week. So basically, technically, I can lose 8 trades in a row this week, and I actually won't even lose any money, because that covers that's already covered by this week, if that makes sense. So obviously the goal is not to lose 8 in a row. I think I've maybe lost 3 in a row, like once in Akashx in the 2 years, maybe twice, maybe. I don't know. I know I've lost like 2 in a row and then I'll win 2. Like I always tell people, I'm like a 70-something% win rate, like 7 out of 10 average. Like that's usually what I try to gun for, is that 6 to 7 out of 10 range. But it's because of the R multiples. All right. I'm going to try to turn this back on for a second and see what happens. So yeah, man, like I just really encourage people to think about that, you know? And again, look, there's going to be some trading styles that are not R to R dependent, because the win rate is going to be so high. Like if your win rate is 80+%, then you can get away with like smaller risk to rewards and stuff, because you're your profits are like outpacing the stop losses so much that you can maybe get a payout before getting your account in trouble, stuff like that, you know? But at the end of the day, it's math, guys. Like, look, the one thing you need to understand in your first 30 days, more than anything, I don't care if you learn my Liberty strategy. I don't care if you learn this strategy, if you learn how to read a chart like a professional. I don't care about any of that. I don't think you should either. I think your first 30 days coming into this thing, or if you're already in Akashx, you need to understand how the hell risk management works. Like, you need to understand the math. Because if you don't do that, what's going to happen is you're going to be confused. You're not going to understand why some people are making profit and some people are not. You're not going to understand why your results are not somebody else's. And you're going to think, oh, there's something wrong with my brain. Oh, there's something wrong with this trader. Oh, there's something wrong with da 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 da. But at the end of the day, do you actually know what you're risking on this trade? Like, what's the risk to reward on the next setup that you're going to take, whether it's a tap to trade, whether it's a trade alert, whatever. And again, if you're going to follow somebody and their risk to reward ratios are not that high, that's fine. They're probably one of those traders in the platform as educators that do have a really high win rate. And you can get on their sessions just like how you're getting on mine. And you can pick their brain and ask them why they do what they do. I'm like 100% sure they're going to give you somewhere to get their plan, get their method of risk management. But please, like, make that the most important thing over learning a strategy or anything. Just understand lot sizes and how to like calculate that correctly when you jump into a trade. So that way there's no surprises when you hit stop loss. When sometimes people hit stop loss and they don't know why, like, they lost so much money, that is the biggest red flag in the world for me. Like, it's like, yo, stop trading and get on a demo or like watch a video right now. Because if you don't know what you're risking before you even jump in, you are literally gambling. Like, you don't like, it's like playing it's like playing blackjack and you like blindfold yourself and you're like, this feels like 5 chips in my hand, but it could be 7. It's like, that's crazy. Like, you wouldn't do that, right? But when you're in like when you press buttons on your phone or a computer and you don't really know what you're looking at, you just like, you care, but not that much. You're like, oh, I think this is the right lot size. Let me just throw money here. It's like, dude, protect capital first and then make money. Okay. So I rambled enough on risk management. If you don't do it, it's on you. All right. Now let's talk about some setups here. So I did say that I was willing to at least show potential setups that happened today. And there was actually one that was like really good. And this is going to be a psychology test for a lot of people. Obviously, like, I already know how this game goes of like missed opportunities and this and that, but I'd rather stick to my plan than like worry about a missed opportunity, because technically this trade would have been like really good. But I don't really, like, I'm not mad that I missed it because I kept my word to myself that I would just chill for the rest of the week. And I did that, you know, and that matters so much more than just one winning trade. Because even if I would have taken this trade and I would have won, but I broke my word of what I said I was going to do after I said I was going to stop, that opens the door and that invites me to continue to be undisciplined with my word heading into next week, and that may bite me in the ass twice as hard as it made me money this week. Does that make sense? You know what I'm saying? Like, I hope you understand what I'm saying. It's like people that are trying to compete for like bodybuilding, and you're like, oh, I'm gonna have a cookie. It's just one cookie, and you have it, and you said you weren't gonna do that, and then it leads to another one in a week, and then like all of a sudden you just kind of derail. That's why I tell you, trading teaches you a lot about yourself. Because your habits and things that you do with like your life is gonna show itself here. And let's just say like those little bad habits that nobody sees because you're living your private life and nobody sees what you do behind closed doors. Your trading account will reflect that, and you're gonna have to really face the person in the mirror if you want to get it done. I'm gonna just let you know. So, you know, that's why I tell you, like, I don't really care that I missed the opportunity, but I did let people know ahead of time in case that they hadn't taken so many trades, in case that they missed some trades, whatever the case is, that you could have taken the opportunity. Now, some people saw the analysis, but they don't trust themselves to take it because I didn't send the alert. And my priority as an educator for Akashx, because that is the vision of this company, is to make this as simple for the newest person that knows little to nothing about trading wins. And so, I'm not trying to like not send trade alerts like on purpose to make a point or anything. Like, I want to help people make money, obviously, right? And make it easy and just be the person that provides it for you. But again, like, I have to show you and lead by example that if I say I'm done for the week, I'm done for the week. Because what if I tell everybody that and then I start sending trade alerts again? Well, dude, I mean, yeah, you're learning from a guy that can't keep his word to the team. You know what I'm saying? So I let you see, I saw an opportunity that in different circumstances I would have taken, and you could have decided to take it, but it would have tested your trust in yourself and in my strategy that has been doing really well to see if you actually would pull the trigger or not. And if you're new, like really new, I don't expect people to do that, but there are some people that have been in here for a little bit, that have been on my sessions, that have seen this enough, that they should be able to trust themselves already to put the trade on. And here's the thing, guys. You could even take the trade with little risk. Like, it could have been a demo. It could have been a very small lot size. You know what I'm saying? Like, it could have been whatever, but just get into the mode of trusting yourself. Because if you don't, you're not going to get as far as you can, man. So real quick, well, first and foremost, if you guys were on Brent's live session this morning, drop like a 1 in the chat if you guys were on Brent's session. Brent was the one that was like at 9 in the morning Eastern. Oh damn, y'all been plugging into the sessions all day. Ooh, you guys are committed. I like it. All right, that's what's up. So if you were on Brent's session, you already know about this entry right here for the sells. Now, the only thing about Brent's session is that if y'all would have held that, oh my God, I think you guys ended up taking profit like right here. Which is fine, like Brent's strategy and everything is meant for that. So Brent knows exactly what he's doing. It's just in hindsight, you're like, damn, bro, this thing freaking melted, Like, but point is, Brent called it, like Brent called that sell right there, Ooh, 2,300 pips? Yeah, no, that's savage. Oh, you held it? Nah, you already know what's up then. Let's go. Let's go. All right, cool. So, really quick. Once you get into Akashx, obviously I deep dive, very thoroughly on my educator training series and everything about, my strategy for trading NAS. It does revolve not completely, but around this pink box, red box, whatever. And I talked about it throughout this week. You guys can watch the recordings if you want on, this is all about time and price, right? This is not like tech. It's an indicator, but it's really not. It's just a visual indicator of, it's not even an indicator, man. I hate to call it that, but it technically is when you search it up here. But all it's doing is just measuring a high and a low within a certain time. That's all it's doing. It's not telling me like, oh, price is oversold, or there's this momentum or this volume or whatever. Like, which again, if you use that, cool. I just don't do that. But the timing of what happens here lets me know a lot about where we can expect price to go. That's what I base my strategy around. So you can see like when we break out of this, how price has revisited this exact point and then pushed off. Do you think that that's a coincidence? There's no coincidences like that. So that's why I know for a fact, because I've back tested and actually seen this thing work over and over and over and over for the last year, that it's trustworthy. Now, I teach that you can either buy out of this or you can anticipate price to pop up and go back below it. So that's something called a breakout and then a fake out. So again, I go very in depth with that stuff once you actually become a part of Akashx. I know we do have some Akashx peeps in here, so I'll kind of explain just a little bit. But if we have like price, this is a price point right here, and I want to do a breakout, that means I'm expecting price to break through that level and continue. That's a breakout. Okay. And that is what I call like my original 1.0 strategy, like my Liberty 1.0. the original strategy, is a breakout strategy. Now 2.0 is just basically a reversal or a fake out, right? So you're either gonna get breakouts or fake outs inside, like outside of that red box. And again, like the tips and tricks of knowing, which I never 100% know, there's this misconception that people kind of have when it comes to traders and how trading works, that like we know what the market's gonna do. When someone says they know what the market's gonna do and then it actually does it, it's just that they've studied it and they know it's such a high probability that they're willing to say they know. It's like you're watching a sports team and you're like, oh, they're playing against this crappy team today. Oh, I know they're gonna win. And then they probably win because they're supposed to beat that bad team. It's the same thing here. Like people say they know things, but unless you actually have unless you're a bank or like you have to, like, I don't even know who are the real like liquidity, like, people say, oh, it's the banks, or oh, it's this, oh, it's that. I don't know who it is. I just know that there are people that move the markets immensely, and that takes a lot of money. Not thousands, not millions, not tens of millions, not even hundreds of millions. Because the stock market and the forex markets are literally trillions of dollars a day. So it's money that you can't even understand where it's coming from. And so, they're going to go ahead and drive prices, again, either just breaking through levels or faking out of levels. And so that's what I look for. So again, the 2.0 model basically is like you have this price point right here, and we expect price to come up above it and then actually come and break back below it, and then boom, right? So that is what we ended up taking for that crazy trade that we had the other day or yesterday, where we had the low right here and we saw that price like came right back above it and then it it pushed down, right? So you have scenarios like that. Okay, so we can see that what happened here is price came down, popped back up. Price came down, popped back up. Now, the only issue with this is that I do not trade at that time of the day, because this time of the day right here is 2:30 in the morning Eastern time, and this is 4:30 in the morning Eastern time. So I am sound asleep at that time. And the NASDAQ, which is the stock market for like tech stocks and everything, that market really really interacts when the stock market opens, which is at 9:30 a.m. Eastern. We've talked about that all week, right? So I've said before already, you can trade this around the clock, but what did I say? There's a window between 8 a.m. to like 5 p.m., but really 9:30 is like when the stock market opens, right? So New York session is at 8 a.m. Let me make that like blue and thicker, all the way to 5 p.m., which is right here. And so again, you can see like, during this red box, price kind of traveled here and that was it. But look how during New York session, we have two big moves, the big drops and the big buys, right? So that's why you want to focus on New York session where you have the true movement. Now, let me address the chat because I forgot that there was some questions here. I'm gonna delete this. Well, actually, maybe I just make this thinner. Yeah, let's make that thinner so you guys can see. Okay. Chat. Okay, hold on. Let me go back a little bit because there was some. Okay. I know there was questions here. Oh, it was before the scammers, huh? Okay. No. Okay, I'm sorry, guys. I know I saw some questions. Maybe they are after the ones. I don't know. Okay, so I see this question though. Do you wait for the candle? Do you wait for candle? Oh, I'm guessing you mean closure before taking the breakout. Yeah, so yes, in general, you want to wait for a break and close at least on the 3 to 5 minute time frame. I don't really like trusting the 1 minute time frame too much, but that's a very generic thing, right? Like just saying like, oh yeah, wait for a candle closure below and just take it. There's a lot of context that goes into that. And I'm glad you asked that question because this is going to be a great example here. Now, when it comes to the Asia fake out, right? This was a different scenario because price had already come up so high and Brent sniped this sell here. So once price came here, we saw that you could have taken like the reversal sells here, but that's not really like how I envision taking a 2.0 style like sell above the Asia high like that. Because I like for it to look more like this or like this. And we'll talk about this in a second. But when I do like the fake out versions of the entries, this is more of what I want to see, not this. This was like a whole move above the Asia high that ended up coming back down very aggressively, but that's not really like a fake out. Like if you would have told me it was like this high and then it started breaking lower, then yeah, because it's not that big. But like this is I think I'm pretty sure this is like 1,000 almost 1,000 pip move right here. Let me see. Yeah, this is 1,000. This is 150 points. This is 1,500 pips above the Asia high. So that's damn near a 3-to-1 risk to reward on my typical breakout setups anyways. So really like this was actually a really beautiful like OG Liberty 1.0 style trade, except it came before 9:30. So I didn't take that. Like I wait for 9:30. But I know some people they kind of remix my strategy a little bit and they'll trade it before 9:30 and sometimes they make money. So look, at the end of the day, like it's not what I teach, but if you make it work for you, I'm not gonna cry about it, and neither are you, so go for it. Um, Somebody asked this, how do you choose where to put? I knew I saw that. Yeah, so the pink box thing is not knowing where to put it. It's a like the indicator does it for me. If you're in Akashx, just like message me. You can see my handle here at I am Rich Vendiga. You guys can find me on the Telegram channel within the Akashx communities or whatever, and I'll send you like my educator training series shows it. So if you're in Akashx, you can find it there. So if you go to user.akashx.com, and I don't think I've actually shown this actually, so I'm glad that we're touching that topic here. So on Akashx, if you go to the Academy section and you go to Educator Training Series, we all have like our own individual profiles here, and you can see mine right here. And this will be like a series of different videos. And you can see like Liberty Strategy right there, right? So this has a little bit of everything, risk management, psychology. Now I really have given you guys like a good amount of stuff on the free trial, like throughout all my sessions. That kind of is like, borderline like over the top a little bit of what these videos talk about, but these are very, specific and they'll give you the indicators, how to use them, the whole thing. So if you're in Akashx, there you go. If not, get in, right? So cool. Well, that addresses that, okay? The length of the wick doesn't mean anything. Um, well, I mean, yes, I guess. I mean, when you say it matters, like, I don't know what you mean by it matters. Like for me, here's the thing, like when my strategy, I just wait for my strategy to play out, and sometimes it's wick, sometimes it's not. But a long wick, all of that really tells us is that Price had like really manipulative intentions of just taking people out of a trade. Like, for example, when we had that news drop, you'll usually see big wicks happen during news. And that's like, if you go to forexfactory.com tomorrow, we have news for PMI at 9:45 a.m. Eastern. So like that's a time frame where you could see big wicks because it just means that a lot of volume came in very aggressively. So usually during news is when you see that. Like the trade that we caught, that super fast trade that we caught like in a minute was this, but look how it had this long wick, right? Well, again, why? Because that was the Nvidia earnings. That was like a big drop that happened out of nowhere. So that's what that means to me. But that's it. I mean, you never know it's a long wick until it happens already. And we talked about like, whenever we have those wicks, how price reacts to those a lot. I think Hey, did price change? Oh, look at that. Price changed on me. I'll explain what I'm saying right now, but wow, that's crazy. I know it was the 45-minute time frame. Yeah. Okay, so here's the funny thing. Sometimes when we have those big wicks, sometimes the charts will change on us because this right here on the 45-minute time frame was a wick. It was like a long wick. And that's why I had drawn this box here. That's why I was kind of tripped out right now. Like, why isn't the wick there? But this was a wick, and I guess they came in and like fixed the candlesticks or something. But that's interesting. So the wicks do matter for like supply and demand zones and where price can react off of. And I do talk about that as well. I do talk about how those wicks play a role in manipulation. So like that wick, the one that you guys traded with Brent in the morning, that trade, like in the moment on the 1 minute time frame, it just looks like price was going up and then it just tanked. But once you like let price fully develop, you'll see that this big pop up, this is the pop up that happened, and then you guys sold, right? So when you go back, it ends up leaving these type of wicks like that on certain time frames. So you see that big wick right there. And that's a supply zone. And that's why we saw towards the end of the session, price ended up coming into here and pushing away. So I used to only trade off of wicks like that before I came up with the whole Liberty strategy thing. I used to just only trade supply and demand, which still was good. Like again, this was an opportunity right here to sell. And then before this whole chart changed on me, and I can even show you the screenshots of when this was a wick. You can see that like super clean like reaction off of there. So the wicks are really important for reactions in the market. Let me check the chat here. Will it bounce? I don't know where you mean will it bounce from. Do any of these classes show how to use all the tabs and lines on the side to mark up your chart? In my educator training series, the one that I was already showing you guys on the Akashx website, there's a video that I have called Apps and Resources, and I kind of do a little crash course on Trading View. So we do show it, but honestly, like a lot of this stuff, I don't use the majority of this. Like this is to hide your drawings. I never really have to touch that. This is to lock all your drawings. Like most of this stuff is whatever. The only thing I really use here is like the highlighter because I teach. The most important thing is really just like being able to put rectangles, which is super simple. Honestly, man, like this is not something that's complicated to use. You just have to be like somebody that touches buttons a lot. That's how I learned it. Nobody ever taught me trading view. It was just like I just clicked on every single button and then I like clicked it and I saw what it did and I did that over and over. So you can watch videos, but at the end of the day, guys, like especially charting, like doing charts, it's a lot of you just playing with it, like you got to get hands-on with this stuff. And that's why a lot of people that, if there's people in Akashx right now that are feeling like they still don't realize like how charts really work, I guarantee you it's because you only watch us and you don't try to do it yourself. Like when you just watch videos or you just watch live sessions, that's like a part of learning. But it's like you go to a classroom as a kid and you're like, oh, I'm going to learn how to write. And then you watch the teacher all day write on the board. And then you never actually pick up the pencil and write. You're not going to get the feel for it. You know? It's the same thing, man. Uh, yeah, TradingView. So I do pay for TradingView. It's like usually 15 bucks, but I use it because I can put a lot of alerts and use the replay tool. Like how you see I use replay and we go back in time. So yeah, taking advantage of the Black Friday sale for TradingView is pretty smart for sure. But yeah, hands-on is important, man. Just click the buttons, figure it out. The most important thing too is the risk to reward uh, tools that I use here, like to show you like the stop loss, the take profit, whatever. Right. But let me get straight to it. Okay. So small time frames. So like once we had that huge meltdown, I wasn't, looking at taking anything like that. However, once I saw that huge meltdown happen, I was already eyeing a potential buy down here. Like if we go back in time, one of the things that I talk about that you guys have already seen me talk about is something called imbalance. I talked about it yesterday. I'll talk about it again. Whenever you have these big candles like this, there are no buyers whatsoever in there. It's just selling, 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 selling. So if you have just straight sells, at some point, price cannot just keep selling. At some point, price has to stop and come back up and rebalance all of that. It has to. So basically, we know that when we get a massive sell-off like that, at some point, we can expect price to slow down and then actually come back up. And that's a really good buy opportunity. So I was actually looking in my ideal scenario here for price to actually break below here and then to break back above. And then that would be like a potential buy area that I would really want to take. And it actually stopped like right before. Like you'll see it stopped like right before that and started coming up. And then you see how it like rebalanced this little price right here slightly. And once it came into that imbalance, you see how I started rejecting again. And then here's where I started looking for the opportunities. And I'll show you guys now in the chats. Which session is good to trade for beginners? Well, there's a couple different types of sessions. There's people that like teach and there's people that trade live. As you can tell, like at this time of the day, I always tell you like this is my non-trading time during Asian session. So it allows me to go back and teach you guys a lot instead of just focusing on live trading. You saw Brent, he's like in the heat of the New York Bell popping up. So he's live trading. He's not teaching much. He's just literally telling you guys to get in, get out, boom, you're done, right? So there's a mix of sessions, you know, but if you want to like, so it depends what you mean. Beginners sometimes like to just make money and not learn anything. Some people do like to learn. So I think the easiest way to learn is just going through our academy though, because it's pre-recorded content that you just do at your own pace. Okay. But let me show you guys here our NAS chat. Because again, I was not planning to send any alerts today, but I did give a heads up on the NAS chat here earlier today. So this was the first thing I said over like before 9:30 even dropped. I said if we pop up above and we start breaking below the Asia high, then you can look for some sells there. I know somebody took the sells there. I think it was who took it? Somebody took the sells there. Oh, D'Angelo. Yeah. Yeah, D'Angelo here, he's like, hey, great start to the morning, another great NAS sell. So he sold NAS based off of this picture I sent you guys in the chat here. Like where if we break below Asia high and retest that, you can sell it. Again, I wasn't a fan of doing that because Brent had already called sells, but you see like basically it breaks below, came right there and rejected, and that was a great sell opportunity right there. Now, the one that I really want to talk about was the buy. Oh, there you are, bro. Let's go. I should have known you were on here. Let's get it, man. Okay, so the other thing I said was this right here. So I said, look, this is before it even broke below. Like price hadn't even broken below. I'm like, if we break below and then we come right back above and shift structure, that's a clean buy because we still have that imbalance from up higher. Again, I already said it. I'm not calling no more scenarios because we already made so much, but I'm letting you know that's there. If you see it and you haven't taken that many trades like me and you want to take it, whatever. So price came below, popped back up above here. Now there's two different scenarios here. Whoops. And this is why trade management is very important. If you end up taking the buy coming back up above that, you would have been up about almost a 2-to-1 risk to reward ratio. Some people, I know that they usually close at 1-to-1, maybe around the 2-to-1. Worst case scenario, if you're up at least what we risk, which is like a 1-to-1 right here, I always say you should be moving your stop loss to break even or to where you entered the market. So that at worst, if it ends up coming back on you, You just make no money, you break even, and you're out of the trade, and you keep it pushing. So if you would have taken it there, you would have hit break even. There's no reason why you should be up 2% and then go and hit stop loss and lose money. If you do that, you're not practicing protecting your entry and covering your assets. So that was the first go around. Second go around. So now we've seen a break above, break below. Boom. Now we have a really clean break below. And personally, like once we get a really clean break below like that, now there are people that know my Liberty strategy that will sell there, right? The same way that we tell you like, oh, if it breaks below the Asia low, like right here, sell, right? So you could technically you're not wrong for selling here. But there's one reason why I don't like the sells here. Let's see if there's at least one person that's been with me for a minute that can tell me, and I'll respond to this question now, why I don't want to take the sells there. Like what would be the only reason? And again, it's not that taking the sells there is wrong because it moved down like 90 points. So that's like almost a 2-to-1. So there's nothing wrong with taking the sells there. But if somebody knows how I am, like why wouldn't I want to take sells there? If any reason. Consolidated, fake out, already. Exactly. Price had already come down a lot. That's exactly why. And I talk about that more like ranges, right? Like this was the high. And so again, you could have sold here and made money. So don't get me wrong. Like the original strategy of the breakout below works there. But I just personally do not like selling an overextended market that's already sold. So at that point from the high, from this high to this Asia low right here, we had already moved almost 3,000 pips. Almost 3,000 pips. So it's like, dude, if this thing already moved 3,000 pips, how much more can it possibly go? And hey, it can. There's no rule that says it can't keep going. But again, you never know what the market's going to do. You just play probabilities and you try to put scenarios together that make sense. And for me, it's like, if we drove price up a bunch, I don't want to buy at the high and I don't want to sell at the low. You want to buy low, sell high. Again, simple concepts that we know in our subconscious, but on the charts and when we start seeing the candlesticks moving and opportunity presenting itself, you just get like emotional and you feel like FOMO and you're just like, I'm gonna hit sell. And again, in this scenario, you would have been okay. But look how if you would have hit sell here, this thing turns around on you big time right there, right? So point is, I would not have wanted to sell there knowing that we had already sold from all the way up here 3,000 pips. And on the 5-minute time frame, I always tell you, man, imbalances. Oh, we're about an hour in, so I need to cut it like basically right here. This imbalance right here, we can see that price never came back up for this. All this price right here from that original sell-off, we had never rebalanced that. And price always will come back for those imbalances. It will, I'm telling you, because I'm going to show you again. So that imbalance area right there was something that kept me like, okay, if we buy low at the right time and at the right spot, this is where we can expect price to get to. Because price needs to rebalance this right here. So at that point, that's why I sent that scenario that you guys see, this one right here, which is if price really breaks below and shifts back up, then that's a really clean buy for me. So again, it's not just this alone or the fact that it crosses back over here. I have to see it break back above and respect that zone. And then boom, we take off, right? So fast forward, because we got to wrap this up. Price comes a little bit lower. Boom. Okay, so now we're pushing up, right? Now here's some other stuff, and I'm not gonna go over this because this is starting to get like more detailed and a little bit more complicated for our new people here. But there's a lot of shift of structure that's happening here. So that's good news if we're looking for buys. But you see we're breaking up into buys here. Now somebody could say, well, Rich, how do we know that it won't do what it did here where it came up and then dropped again? We don't know, man. That's why you put a calculated risk and you figure it out. You know, you gotta take the risk because if it's not playing within my zone, I'm not even taking a trade anyways. So if it's in my zone and there's a potential thing that we know can happen, then just take the risk. That's the whole point of the strategy. So boom, price taps, 50-point stop. And targeting that imbalance here is like a 3.5 to 1. If we move this to 4 to 1 risk to reward ratio, which is what I usually like to do for my final targets, price ends up coming up. And then it ends up smacking there and a little bit more. So people got the play ahead of time. They got the targets, everything. If you decided to take it, great. This would have added another 4% to my tally for the week, but it's okay. Like I said, I wasn't gonna trade. I'm not looking at this trade like, oh my God, I missed it. Because we catch these, I'm not gonna say all the time, but like the market will continue to give opportunities.